Manufacturers of steel products in China have been striving to improve their self-sufficiency and the level of technology to better support the development of downstream industries. With the rapid development of the new energy vehicle sector, high-performance silicon steel, the core material for drive motors for NEVs, has always been a hotspot for technological innovation in the industry. Details of these and more in news from around the globe.
A silicon steel company in Jinan City, North China's Hebei province, has been working to improve the standard and quality of its products over the years. Since the beginning of this year, China has been pushing forward adjustments in its steel industry structure and continuously launching new products covering such areas as automotive steel, electrical steel, vessels, and machinery. These products have played a supporting role in the high-quality development of the downstream manufacturing industry. Elsewhere, Australia's economy barely grew in the third quarter as exports flagged and households reeling from a surge in mortgage payments were reluctant to spend, suggesting rate hikes were working to restrain demand. Marking an eighth straight quarter of growth, albeit its slowest in a year, real gross domestic product GDP inched 0.2% higher in July to September from the previous quarter. Annual GDP growth stood at 2.1%, little change from the previous quarter. The income tax paid jumped 23% from a year ago after the expiry of a tax offset scheme, and mortgage payments surged 71% as more people came off fixed-rate mortgages onto higher variable rates. The central bank opted to stand pat to allow more time to assess the impact of a whopping 425 basis points jump in interest rates since May last year. Finally, Japanese investors are spending the most in 2 decades to buy up properties overseas, undeterred by the global real estate slump and the yen's decline to a 50-year low. A Manhattan skyscraper, data centers in Toronto, and office buildings in London are among the assets that Japanese companies and pension funds have scooped up this year. Flush with cash and in the only developed economy with access to rock-bottom financing rates, their purchases are giving some relief to the market as rising office vacancies and interest rates keep other buyers away. Japan sourced capital has accounted for $7.4 billion of global commercial real estate transactions so far in 2023, more than 3 times the annual average in the past 15 years.